So today we're looking at why a pre-approval is super important, and it's an updated version for 2023. So if you're thinking about getting a pre-approval, this is a video to watch. If in the end you find value in this video, please consider hitting that like button, as it really helps out the channel. And a big thank you to all our subscribers whose support inspires us to create more content, which we hope you'll enjoy. Jaden, the pre-approval is so important in 2023, and the number one reason is knowing our budget. Why is this important?
Yeah, with the current market conditions, the rates are changing almost every month. We've had 9 rate rises so far. There's potential for more in the future. And it was pretty easy a couple of years ago. When the interest rates were stable, it meant the bank's assessment, or I guess your borrowing capacity, stayed the same. So you might have got your pre approval today. The bank said, "Yep, Jaden, here's $500,000. Go out and find your first home." Then in 3 months' time, when you found your home, the interest rates were the same. They'd still give you 500,000, and it was all pretty straightforward. Fast forward to 2023, it's a completely different situation. We've got quite an evolving landscape where the interest rates have already risen once this year. There's potential for future rises in the next few months. And what can happen is the banks might be assessing you today and saying, "Yep, Jaden, we're happy to give you $500,000 based on the current interest rates of circa 5%. But next month, if the interest rates go up to 5.5%, the repayments increase and your borrowing capacity can also decrease." So I had a situation recently with James. He spoke to us back in December last year and said, "Hey, I'm thinking about buying a place." We went through the pre-approval options and he said, "You know what? I don't want to apply for a pre-approval right now. I think the market's gonna drop down. I'm gonna wait to next year to see what happens." I said, "Well, wait, here's the reality. If you apply for a pre-approval now, we can lock in your assessment rate. The bank will give you that piece of paper and says, 'Yep, you're good to go for the 500,000 or the amount of pre-approval for the next 3 months.'" He contacted me the other day and said, "All right, I'm ready to go. Let's do the pre-approval." And because there'd been 2 rate rises, one in December, one in February, his borrowing capacity had come down by $60,000. So it's important to think about this stuff before the time, and the pre-approval will give you that reassurance. You'll know that for the next 90 days with the right bank, they'll lock in that assessment rate and they'll give you the confidence to know that I've got that money to spend. It's not going to change. And if I find the right home, I can jump on it right away.
And it's super important that you get a fully assessed pre-approval. As Jaden said, if you get a fully assessed pre-approval, the right bank will lock in your pre-approval, providing there's no changes to your financial circumstances, or you're not changing from, say, buying a home to building a property. Providing there's no big changes, then the bank will honor that pre-approval, providing it's a fully assessed pre-approval. So just keep that in mind. Then the next one is it's going to save you a heap of time when you do narrow down your search and find a property. Jaden, why is this the case?
Yeah, so it can be the case where you have been looking for months and months and months, and there's not many properties. We're at a point in time where the stock or the properties on market are at 10 to 15-year lows. It's insane. There's more people looking than there are properties for sale still, even in a market where they're saying prices are softening out. Anyway, you get to the point that you find the right home, you're ready to make an offer, and there's so many things you need to do. You've got to get insurance, you've got to get your finance approved, you've got everything. And it can become just a stressful mess if you don't have your pre approval. In the case where you have your pre approval, it's a lot easier. You already know that the bank said, "Yep, Josh, you're good to go for your new home of $600,000, subject to you finding a home." So they've already looked at your pay slips, they've already looked at your bank statements, they've looked at your credit file. They know that your job is acceptable, your overtime or your over situation is all good to go. And it's just a case of you finding that property. So in that situation, when you get your pre-approval, literally all you need to do is come back to us. We do mortgage broker. We can help lots of home buyers across Australia with the contract to sale. You can say, "Yep, I found the perfect home. It's a unit in Milton, in Brisbane, for $600,000. Let's go back to the bank." And the bank pretty much just needs to evaluation, and it's a lot quicker and a lot less stressful compared to the alternate where you don't have a pre-approval. You're scampering around, going, "Oh well, I need to get pay slips. I don't have those. Oh, do you have your tax return? No, I haven't done it yet." Well, you might not be eligible for the government schemes. And there can be things you can miss out on if you're not organized.
The other aspect that the pre-approval is going to save you time on is making sure you don't waste time looking at properties you can't afford. Having and waiting until you have a fully assessed pre-approval will mean that you can find no more than 3 suburbs that are in your price bracket, and you know that the bank is going to help you with the finance for. So super important you get that pre-approval. The next one is negotiating power. And Jaden, with a fully assessed pre-approval, it's a game changer when you're negotiating. How would you use a fully assessed pre-approval to help negotiate?
There's a couple of elements to this. So when you're making an offer on a property, there's different things you can use when negotiating to make your offer more favorable. You can obviously, firstly, offer a bigger price. If you offer $1 million for a property that's worth $500,000, they're probably going to take your offer. So that's always good, but you don't always have an unlimited budget. So then there's conditions of your offer that make it more appealing. A common one is like, say, the settlement period. So depending on your state, if you sign a contract today, you'll either move into the home in about a month's time or 6 to 8 weeks, depending. So a month and a half. But you can use this to your advantage. If you know that the sellers are potentially moving interstate, they might say, oh, well, actually, we prefer a 2 month settlement instead of a 1 month settlement. You can use that condition and say, well, here's my offer. I'm going to offer 500,000, but you say, I'm going to do the 2 month settlement, which is a condition that the sellers really want. Another one that you can do when you've got a pre-approval is reduce your finance terms. So when you're making an offer on that same property, you say, all right, I'm going to offer 480,000. I'm going to offer 60-day settlement, and I'm going to offer, instead of a normal 14-day finance period, because I've got my pre-approval, because I'm working with a broker that can get this approved really quickly, I'm going to do 7 days. It's all done in a week's time. And it makes your offer a lot more appealing than the next one. If Josh was offering a 14-day finance clause, it means it's going to potentially take him twice as long to get his loan approved, and it slows down the process. It makes it much less appealing for the sellers.
So when you've got your fully assessed pre-approval, do keep in mind that reducing your terms will allow you to save a huge amount in terms of purchase price. The next one is being confident. So Jaden, what will a pre-approval allow you to do, and why will it give you confidence when you're making offers?
Yeah, I think it's first important to differentiate. There are different types of pre-approvals. So we've had previous videos you might have seen where we talk about the coffee shop pre-approval. And that's where you rock up to the bank, you say, hey, Mr. or Mrs. Bank, I want to get a pre-approval for a $300,000 home. Can you give it to me? They put in the system spits out, yeah, like you definitely can do that based on the numbers we gave you, but no one's actually looked at your living expenses in your bank statements. If you got gambling, if you got bad credit, if you've got a job that they might not accept that income, if you're casual, contracting, there's all sorts of different situations where if your pre-approval isn't fully assessed, if it hasn't gone to, generally it's a human that actually sits there and looks at your pay slips, looks at your bank statements, looks at your situation, looks at your savings, if it's genuine, all this other stuff to say, yep, you know what? We're happy to give that money, Josh. Here's your pre-approval for 300,000, and it's been fully assessed. All we need to see now is a contract to sale on the home that you want to buy and live in. That's all they need. So you can have a lot more confidence knowing that, hey, the bank has said, like, my partner and I, they love our situation. We're happy with your deposit. It's genuine savings, your rental history, all that other stuff has been factored in there. They've looked at your profile and said, yep, all we need to know is that the place you're buying isn't, a caravan. That's pretty much all they're checking.
The next thing a pre-approval will help you with is identifying any issues that might pop up. And Jaden, you had a customer recently who this happened to. What happened, and how did you fix it?
Yeah, there can be all sorts of situations. I've had ones where people's spending was a little out of hand and we had to help them with sort of managing the budget and pulling some things in to get things ready to go to the bank. In one recently, I had a young fellow who was buying his first home, had done everything right over the last few years. Had a pretty common name, though, was the main issue. So had never checked his credit file. All was pretty good. We went to do the pre-approval process. So we got his pay slips together, we got his bank statements, all that stuff. And as part of the process, we'll do a read-only soft credit check. So we'll say like, hey, we're just going to check out your credit file, make sure it's all good. In most cases, if you haven't had credit, it doesn't really matter. You kind of get a default score of 700. The bank's happy with that. In this case, our client had been the victim of identity fraud. So he had a $15,000 Citibank credit card default on his credit file they had no idea about. So in uncovering this, we said, well, mate, like this is a big issue. There's an unpaid credit card on your credit file. They're chasing down. They think you owe that money. If we apply for a bank now, they're going to say, forget it. We're not touching this guy with a barge pole. So fortunately, he was able to contact Citibank, find out what had happened. It was identity fraud, had to get investigated. It took almost 2 months to clear up and get that removed from his credit file. But to our point earlier, if we hadn't gone through that pre-approval process, if we hadn't checked it, he could have gotten down the path in 2 months and said, I found the perfect house. I've got my deposit ready to go. And the bank would just flat out say, no, not until that default is gone. So there's lots of things like this that you need to make sure you're ahead of the game because you don't want to miss out when the right home comes up.
And the final benefit is being able to plan ahead with the pre-approval. Why is this important, Jed?
Not all banks will accept all types of properties. So the most common one might be buying units in the city. So I was speaking with a couple the other day. They loved living in the city. They had just moved over from abroad and were living in Australia. They're from Argentina. And so they said, well, we like inner city living. We like being able to walk. We don't want to have a car. We want to buy a nice apartment in a pretty high density tower in the city. So I said, well, do you realize that most banks don't particularly love high density units that are in the city? Now, the main reason is they see them as higher risk because there's lots more people in a small area. And if you have a small deposit, less than 10% deposit, it can be a little bit trickier. There are some exceptions to this, but it's just one thing that you need to be aware of. So not all banks will accept all types of properties. It's also the same. I had another couple recently that had found the perfect home. They were ready to go, and their home was next to some high tension power lines. So there's things like this that if you're looking at buying particular properties or different areas, even if you're looking at building and going down different paths, it is a different type of loan. And having that conversation with your broker up front as part of the pre-approval process is going to help you be prepared. Because, like I said, there's nothing worse than it takes the average home buyer 3 to 6 months just to find the right house. And when you finally struck that gold, you're about to find the house of your dreams. You're looking at the bathrooms, you're planning where the kids are going to sleep, etc., etc. You don't want to miss out. You want to be prepared. And that's what having the pre-approval and speaking with the mortgage broker that knows what they're doing, that can help you through that process.
And here at Hunter Galloway, we're mortgage brokers who can do just this. We get home loans approved. We help Australia-wide and don't charge a fee for our service. So reach out and contact us at huntergalloway.com.au or call us on 1300 088 065. Until next time, thanks for watching, and I'll catch you then.